You watched the financial statements and other cash flow statement, correct?
Yes, sir.
Okay, okay. So Fatima, cash sales versus credit sales. This is what is they are asking. So sales to customer could be in
So I
cash.
can't see the screen, sir.
You'll see in a second. Can you see now?
No, sir.
Not yet.
Not yet.
Now?
No, sir. Yes, I can see it now, sir.
Okay. So cash sales versus credit sales. So sales to customers could be in cash or on credit, correct? So if this is the customer who has approached us, we can either take cash from him or we can ask him to take the goods and pay later. Can this
Yes,
happen?
sir.
Yes, this
Yes,
can
sir.
happen. So when it's a cash sale, definitely which account is increasing? Cash.
Cash.
And when cash is what to us, Fatima? It's an asset. Am I
It's
right?
an asset. Yes, sir.
So increase in asset is debit
Debit.
and revenue is income for us.
Income. Yes,
So
sir.
increase in revenue is credit.
It's credit.
And instead of cash, if we sell on credit, so one more, this is also an asset, but this is called receivables. So
Receivable.
receivables increase debit and revenue increase credit.
Credit.
And with the credit sale, an additional entry needs to be made when customer pays. So when customer pays you, which account is increasing? Cash account is increasing.
Cash
Am I right?
accounting. Yes, sir.
Yeah, debit. And which account is decreasing? Receivables account is decreasing.
Receivable.
So
Yes,
when
sir.
asset decreases, it is credit. So
Credit.
receivable credit because asset is decreasing. Okay.
Yes, sir.
So this 2 or 3 sessions would have made your concept very clear now. Correct?
Yes, sir.
And this balancing part we have already done, Fatima. So no need to
Yes, sir.
discuss this. We have already discussed how to balance. And here, like, there is one more question. We will do this activity. So this
Yes, sir.
activity, like, there will be a question. So I think this is the last activity. And journals we have already discussed. Yeah. Today I am winding up this chapter at any cost.
Yes, sir.
Yeah. So Fatima, let's see the activity. Ledger entries. Ron Knuckle set up a business selling keep fit equipment, trading under the name of Buy Your Biceps Shop. Okay, fine.
Yes.
He put 7,000 of his own money. So can I say this is capital?
It is capital. Yes, sir.
Yeah. Into the business bank account and in his first period of trading. So the following transactions occurred. So when this comes, what is coming in the business, Fatima? Cash.
Cash.
So asset account is increasing, so debit.
Yes, sir.
And you are putting your capital to capital. So capital is always credit. Am I right?
Credit. Yes, sir.
Paid rent for the period, purchased equipment on credit, took out a bank loan, purchased shop fittings. All these things are given, Fatima. So
Yes, sir.
can you just tell me each and everyone's journal?
Yes, sir.
Then what we can do is then you have to make the T accounts and give me the screenshot. I'm waiting for that. Okay.
Okay. Okay, sir.
And this is the last activity. We can, like, when you make your this thing, we can just check the activity answer also. Here the activity answer would be given.
Okay, sir.
Activity answer, activity Douglas company, na? So we are doing the activity. Yeah. So when you are done with that, we can check the activities answers. Okay.
All right, sir.
I
Yes,
think
sir.
this one we did. Okay. Fourth one we are seeing. Activity 4. I think that was activity 4 only.
Yes, sir. It was activity 4.
Yeah. Activity 3 is this. So activity 3 is okay. Activity 4, yeah, yeah,
That.
yeah. Okay. So we will do this. So Fatima, you have to tell me all the journals with what is increasing, what is decreasing,
Yes, sir.
and then you have to make the T accounts. Today, this is the task for you.
Okay, sir.
Come on, tell me this one. What I should, the first one I have written for you. Second one.
Second, first one is the paid rent, and the next
Yeah,
is
paid rent. Yeah, yeah, paid rent.
purchased
So
an
yeah. So
equipment. So,
tell me what is increasing or what is decreasing or what is debit, what is credit. Tell me for this.
cash is decreasing. So
Cash is decreasing, so it will be in credit, correct?
that,
Okay.
yes, sir.
Cash credit. And
And
rent
the
is what? Expense. So expense is always
expense
what?
expense is credit.
What is it? What is in credit here?
The cash.
So again, expense will be credit.
Yes, sir.
What? How? There are in
Okay,
every.
okay. The cash is decreasing. So
Yeah, asset is decreasing, Fatima. So asset is decreasing, so it's credit. I understand.
yes, sir.
You are paying rent now, so rent is an expense for the business. Expense is what?
Expenses is debit.
That's what I wanted.
Yes, sir.
So rent debit. Okay.
Yes, sir.
I'm writing once again, Fatima. Why are you forgetting? I don't know.
Yes. So sorry.
Expense and cash is expense is debit and cash is an asset. Asset decrease is credit. Fine.
Yes, sir.
Please tell me the second. Oh, you can note it down, Fatima, because you have to make the T account also, and we will
Yes.
discuss the T account then.
Uh, Rent is debit and the purchased equipment.
Next one, purchase equipment. You should answer me. What is this? It is on credit.
It is okay on credit. So the receivables are increasing.
No, how receivables are increasing? You are purchasing equipment on credit. You
Okay, okay.
have to
So
pay.
not receivables. Sorry, payables are increasing.
Payables are increasing. So payables are liability. Liability increases
Liabilities.
credit.
Yes.
Credit. Yeah, payables increases credit. Okay.
Yes, sir.
So liability increase is always credit. And purchase is what? Purchase like you are purchasing equipment. It's an asset. Asset is
It's an
increasing.
asset. Yes, sir. So it's a credit.
Debit. How credit?
But 1 second,
But
sir.
purchase increase, na?
Yes, sir.
So debit or credit?
It's debit.
Debit. That's what.
Debit because asset is
Yeah.
increasing. Yes,
Yeah.
yes.
Asset increase debit. Now next one.
Yes. One
Took
second.
out took out a bank loan. So you took a bank loan. So
Yes,
your
sir.
liability is increasing and your asset is increasing. Which asset? When you take a loan, what comes in your hand?
Cash comes into my
Cash.
hand.
So cash is
So
increasing.
cash is increasing. That is debit.
Debit. Debit.
And liability is increasing.
Yeah. To loan
That's
account. To loan account. That is credit. So
credit.
yeah, liability increase. Credit. And asset increase. Debit. Okay.
Yes, sir.
Excuse me,
1 second. I'll
Fatima.
just
Just a
take.
second, Fatima. Just sorry to interrupt. I got a call.
Sure.
Just a second. Yeah.
Okay, okay.
Yeah. You make note of it and write down the amounts accordingly. Yeah.
Yes, yes. That's
Yeah. So Fatima, did you write the amounts?
Yes, sir.
Yeah. So please accordingly write the amounts over also there, like rent 3,500 and cash like this. I'll tell you. Rent 3,500, cash credit 3,500. So I'm not writing because I'm not finding space there. Okay.
Yes, sir.
Yeah. So Fatima, till now, as far as right now we have done, we did right. Now purchase shop fittings. Now tell me what debit and what credit in this for cash. Okay. Yeah.
For cash.
Yeah.
So the cash is incoming. So,
Fatima, you're purchasing shop fittings. So how will cash come to you when you purchase something?
for cash, it says, right, sir?
You're paying cash to purchase shop fittings, Fatima. Shop
Okay,
fittings is
then
asset
it's
for your business. Yeah.
yes, sir. Then as it increases,
Shop fittings is asset. It is increasing assets in your business. Yes.
yes,
That means it
so
is adding up to the existing assets and one
yes,
asset is decreasing here. What is that asset?
cash.
Cash. So shop
It
fittings will
goes
put in debit.
and cash on the credit.
Shop fitting will put in debit because asset is increasing and cash is like
De-
credit. It is decreasing. Asset is
decrease.
also decreasing. Yeah.
Yes,
Write down the amounts. Yeah. Then we'll go for the next three.
yes, sir. Yes, sir.
Now, sales of equipment cash.
Um,
So when you are selling an equipment, which asset would increase?
cash.
Very good, excellent. So cash
So
increases debit.
that
Okay,
is
asset
debit.
increases debit. Yeah, and when you are selling equipment, one asset is decreasing from your business. What is going
Yes, sir.
out from the business? Equipment,
The
correct?
equipment. Yes, sir.
Equipment credit
Credit.
because asset decreases credit.
Yes, sir.
Next, payment to suppliers. So when you pay to suppliers,
So there's
you're
one more.
yeah.
Sales of equipment on credit.
Okay, yeah, yeah. Sales of equipment on credit. So what comes in your business?
Uh,
Nothing comes. Nothing
Nothing
comes.
comes.
But when you sell to someone,
Receivable.
yeah, receivables increase. Receivables
Receivables increase.
increase. That means asset increase, debit.
Debit.
Yeah, and one asset is decreasing. That is
Decreasing that goes
equipment.
to credit.
Equipment. Yes.
Yes.
Yeah. Next.
The payment to suppliers is an
So
expense.
payment to suppliers is not expense. Payment to
It's not.
suppliers. No, no, no. Expenses like rent, those things. Payment to
Okay.
supplier is a transaction. It happens on regular basis. Correct.
Okay. Okay. Yes, sir.
So when you pay to suppliers, definitely one account is decreasing. That is cash.
Cash. Yes, sir.
Cash decreases. It is credit. And suppliers are payables. So payables are decreasing. So when liability decreases, it is debit.
Yes.
Of course, it is debit. Yes, liability increases credit, liability decreases debit. And one
Yes, sir.
more small trick is when you write cash in credit, other thing will be debit only.
Okay. Yes, sir.
I don't want to give any shortcut tricks to students, but tricks is not good.
Okay.
The
Yes, sir.
concept is important. So if you at times forget that also, you can easily understand like, yeah, cash is credit now. So the debit will be the payables only.
Payables. Yes, sir.
So payables decrease in liability is debit. Okay.
Yes.
Now, next payment received from customers. So you are writing this one, huh? So you write all of whatever is left over, Fatima first. What is like you did not record? I'm just bringing this page. Yeah, yeah.
Yes.
Just write on whatever is not there till now. Okay.
Yes, sir.
Yeah.
So done.
You can note on this also if missed out
Yes, sir.
somewhere. Yeah.
Yes, sir. Yes, sir. Done.
Now please write this one if thing this is done now. Okay, we will do this. Payments received from customers. So like
Receivables.
one is cash is increasing,
Yes, sir.
debit, asset increases, and receivables decreasing, asset
Yes.
decreases, correct?
Yes, sir.
Credit, asset decreases. Paid interest on loan. So interest is always an expense, correct? So
Expense.
interest is debit,
Debit.
expense increase is debit, and what is decreasing? Cash. It is
Cash.
credit. Yeah, asset decreases credit.
Yes.
All other expenses all paid in cash. So other like expenses to cash, correct?
Cash. Yes, sir.
Expenses is debit and cash is
Cash
credit
is
because
credit.
cash is decreasing. Yeah. And
Yes.
drawings is always debit. I
Debit.
already told.
Yes, sir.
Drawings is debit and cash is
Is
credit.
credit.
Yeah. Okay.
Yes,
Please
sir.
make a note of this. And now T account you have to make and show me. Okay. I'm just waiting.
Yes, sir. So the T accounts for the mentioned ones here, cash at bank, capital, and all.
Yeah. These all accounts, whatever are left there now, you have to make T accounts of all that.
Okay. Okay, sir.
All single accounts and whatever is debit, like so for example, if I take cash, so debit shows increase in asset. Am I right?
Yes, sir.
So wherever cash has increased, debit. And in cash, you won't write cash anytime. You write other thing only. For example,
Yes, sir.
so here where cash has increased, here the cash has increased. Correct? When we sold equipment. Am I right?
Yes, sir. Yes, sir.
So it was debit now. So we'll write equipment in debit. What will write?
Equipment and debit.
Why we'll write equipment in debit? We cannot write cash in cash. Correct?
Yes, sir.
So because of which cash increase, we'll write that in debit. Okay.
Yes, sir.
That's what you know now how to make T account. In previous class I explained.
Yes, yes. You explained in the previous class, sir.
Yeah, I took complete time and explained, and today also I'm going to explain even though you write and give, because again like next time you should be in a very good position to answer things, correct?
Yes, sir.
Yeah.
I'm doing it.
Yeah. So shall I give you some 10 minutes or 10 minutes or 50 minutes of time, Fatima, to do this?
Yes, sir.
It will be better. Why? Because again I can come out, I can call, and again I can put the recording, and again I can explain.
Right.
Otherwise
Yes.
this time would be wasted. Correct?
Yes, sir.
Is it right now? Shall I do that?
Yes, yes. Yes, sir.
Yeah, please you do that. I'm waiting. Yeah.
Okay. Okay.
Yeah.
Yes, sir.